Hello traders, Gary Wagner here. Approximately 10:30 in Honolulu, 4:30 in New York. It is Friday, finally, the 26th day of October, 2012, and this is the daily report for gold and silver, our weekend review. Interesting week in the market, to say the least. Currently, mixed bag, but that mixed bag is mostly unchanged on the day in both gold and silver. Gold trading higher, silver, platinum, palladium trading lower on the day. As you can see, current print on the screen is roughly 1711. 1712 bid-ask spread puts it up about $1 on the day. You can see the high and the low range right within this candle right here, 1719 to 1720. That's your high on the day. The low on the day is 1699. We do have silver trading lower this morning. It's off 3 cents, so we'll call it lower to unchanged. It is trading above $32 per ounce. 31.82 is really the area that I do want to see a close above. In terms of the range itself, 31.50 on the low side and 33.60 on the high. Although I actually don't see that. I think that that's a misprint. We'll go and have to take a look at exactly what the high price is. You know, the key element that I've really been trying to discern and trying to get some sort of compelling technical evidence is to whether or not this corrective wave has actually terminated and if we're in our counter wave B. And here's what I mean by that. When we take a look at this market, now go ahead and blow that up in a second. You can see I have one basic Fibonacci retracement here, which is our longer term. This is a short term study, of course, 360-minute chart. And then a secondary, which is much smaller, and that really starts at about 1646. When we take a look at this market and we look at this major move to the upside, this is what I believe in terms of an intermediate count. This was our wave one right in here. And then that wave one, of course, is composed of a subset of waves. Once we reach this top right in here, I believe we went into our corrective wave two. And our corrective wave two, our corrective wave two is going to be composed, I believe, of a subcount, and that subcount within it is going to be an A, a B, and then a final C wave to conclude this intermediate two right in here. So the question is really whether or not we found some sort of a bottom in this marketplace at 1700. It has been my contention, it has been my belief that this particular area within the marketplace should hold, at least for the time being. And if that's the case, because it's a little early to tell, the one thing that we can say is that we have absolutely found some support over the last few days in this area. I believe we've had lows of 1697, but as you can see in each attempt, we'll go ahead and blow that up in a second, but in each attempt, they were able to take the market above and at least at this moment close above that particular point. Now that we have that in line, let's go ahead and blow this up. Once again, this is a Henkin chart. And what you can see is as follows. And this is where I do believe we're seeing somewhat of a different type of activity. In terms of subwaves, as this market moves down, you see that it will retrace back to the upside a little bit, but then move down, typically make a lower low, moves back up, and then so forth, moves down and moves back up. But you really don't see at any point it really trying to form any kind of a base. Now, it did appear as though there was a base being formed here, but that was to be very, very, very short-lived, as you can see, because the market came down and made this new low. Now, of course, this new low, this is 1703. That's this line right in here. You can see a series of lows, of course, below that, but in terms of the Henkin candles, you also see that they all closed above that. Now, we are getting a different type of a pattern here And what I'm referring to, and again, this is a short-term study, it's only 360, but if you take a look, for example, at the activity, very rarely do you get alternating candles as we have here. Here you have 3 green, 2 red, doji, and then green. Whereas what you were getting prior to this was the market would sell off. As that market sold off, you got a smaller body candle, you get that pivot candle, that's this doji right in here, of course, and then it would start moving up. You can see there's an absence of tails, but then the tails begin to show up, the dojis begin to show up, and that really is our precursor to when the market then goes and makes a new low, meaning a low below this low, a low below this low, and so forth. Now, we did make a new low here, there's no doubt about it. At the same time, we're seeing some consolidating market activity because not only is it beginning to trade off the low, but unlike these retracements, counterwave, retracement, counterwave, what we're getting is really almost a flat line, meaning you're getting these alternating candle colors, and when you get them, that's usually significant of A, a sideways market, and B, it can also be indicative of a market which begins or is forming a base. All I've done, traders, is converted our Henkin back into a standard daily candlestick chart, and really what we see when we do this is really more of the same. In other words, you're still getting this alternating pattern right in here, and this alternating pattern has been extended. Look, it really began right around the 23rd, so it's gone on for some time. It is a little bit different than this top that we see here, this consolidation, in terms of the length, in terms of the time parameter itself. So we really want to pay a close attention, but it does appear, at least on a tentative basis, that we are forming a base within this area. A couple of more charts that I do want to look at on today's show, kind of moving out in time, getting a bigger picture, and then we'll get another bigger picture. We're going to look at a daily and then a weekly if time permits, and I believe that it should. Daily chart, standard candlestick format, Fibonacci retracement, as well as current Elliott wave count. So just to recap where I believe that we are within the marketplace itself, long corrective winner. This is wave number 4. It's a major fourth right here, as you can see. And that would then begin the onset of a major 5th wave. And of course, that major 5th wave is going to be composed of a subcount of 5. My sense right now that in terms of that particular count itself is that we clearly have seen wave 1 begin, and it is my belief that this is probably, in terms of this intermediate count, the beginnings of our secondary, or wave 2. Now, wave 2, as I said, should be composed of an A, B, and C. I believe we've probably seen our A right in here. We're probably in our counter wave B, and from there we'll have one final C. That C will either be a flat, taking us back to 1700. If it's a standard zigzag, it could go as low as 1634. However, there's one other solution or possibility, and that is we're still within wave 1, and then in terms of our subcount, as you can see, we're looking at it like that. My sense is the former is more likely. In other words, I believe that in terms of our intermediate count, we have probably seen the conclusion of our first wave. We were able to show a 5 count on a subcount within there, and then at this point, most likely, as I said, we're looking at something like A, B, and then a final C. And then, of course, the C will really be the conclusion of this intermediate secondary wave. And then, of course, following the intermediate secondary wave will take us back into the impulse cycle. Impulse cycle, of course, will be composed of this 3rd wave. So we'll have 1, 2 will complete, and then we'll go into our 3rd. My personal sense is that absolutely 3rd wave, that impulse wave, has to test and take out this top at 1800. So for our final chart to look at within the gold market today. Want to kind of end our gold review with a weekly chart, straight candlestick format. We will convert it into a Henkin, but you're going to see it's going to be very, very similar in that. We talked about a couple of things over the last couple of weeks. First of all, in terms of being an armchair quarterback, meaning looking at it after the fact. Clear-cut top here. You've got the triple doji. You've got this shooting star-esque, meaning it doesn't have as long of a tail as it needs to, but it is within that position in engulfing. Bearish, of course, two-day pattern, confirmation. Now, this is that third week. This is the week in review, and here's what I find interesting and noteworthy. First, take a look at the high and the low. High being just shy of this 23% retracement area, 1734. Low, 1695, just shy of that. So it is pretty much encompassed the entire trading range of this entire week. As I said, pretty much has encompassed from the 23% level, 1734 to 1695. So it's really been right within this range here. The other thing that I believe is pretty noteworthy is the fact that it's a very, very small body size. And that, of course, is indicative of a market that has the potential to reverse. In this case, we've seen the market move down. It has hit a logical point in terms of finding support here at 1700. And my sense is we'll probably see some sort of a clip back up or a move back to the upside in this next week of trading. You know, in silver, all throughout this last week, I've been talking about a pretty critical support area. That support area lines up at just at around 3150, 3147, as you can see here. It is a 50% retracement. I'll go ahead and shrink the chart down in a little bit, compress it so you can see where that comes from. And you can see that even more than gold, you see these alternating patterns of red, green, red, green, red, green, small body size, wicks on both sides. What this is really indicative of is a sideways market. In this case, it could easily be a sideways market that's forming a base. I do believe that we've got really good support at around 3150. And when we go ahead, let me compress this chart so you get a better sense for where this is coming from. And when we take a look at it, go ahead and move that this way. Let's compress just a little bit more. There we go. And so you can see that we're really looking at a pretty sizable fib retracement, which is accounting for $26 on the low side to almost $38 on the high side. When we do that, we have some pretty strong areas, the ones that I pointed out. 76, of course, right here. And this 50% also lines up very close to this 50% here, as well as this line here. They're both 50%, but of course, this is a much shorter Fibonacci retracement area. And therefore, it is my sense that we've got some real strong support right within this area. Go ahead and draw that all the way back. And you can see that you get this strong breakout right in here as the market moves up. But here, we're getting a very, very strong base being formed. You can see the number of lows that have been hit down here and the fact that they have not pulled the market lower or below this 3150 area. And I believe that, like gold, we will probably see higher pricing next week as we get this counter wave up. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you on Monday for another daily update and review. Bye-bye.